Hello, I hope you are fine. The objective of this video is to provide an overview of the fintech ecosystem. This video is useful for beginners who wish to have an overview and fundamental understanding about what is fintech. I first present the definition of fintech and conceptual framework. Next, I will introduce the different sectors in fintech. Let's get started. The term fintech is a contraction of financial technology. Fintech can be described as a marriage between the financial services and technology sector. Fintech is a young area. The use of various terms related to fintech are often ambiguous. Market participants and regulators at times use different terms to describe the same activity or the same term for different activities. For example, the terms fintech credit, peer-to-peer lending, crowdfunding are often used interchangeably. It would be premature to narrowly define a field that is rapidly evolving. Let's look into a detailed definition from Bank for International Settlements. The Financial Stability Board defines fintech as technologically enabled financial innovation that could result in new business models, applications, processes, or products with an associated material effect on financial markets and institutions, and the provision of financial services. Take note of the keywords in the definition. Fintech involves various aspects, including business models, applications, processes, and products. Is fintech a new phenomenon? Let's learn about the history of fintech. The history of fintech can be traced back to as early as in 1950s, where credit card is used to reduce the burden of carrying cash. The first automatic teller machine, ATM, was set up in June 1967 on a street in Enfield, London, at a branch of Barclays Bank. Online banking system became popular in the 1990s. Since early 2000s, the financial technology has further digitized via the mobile wallets, payment apps, robo-advisors for wealth planning, and crowdfunding platforms. Harvard Business School researcher Clayton Christensen described fintech as disruptive innovation. This is because technology-centric startups have innovated the products and services traditionally offered by financial institutions. Fintech is an IT-induced transformation. Fintech involves new technology for improving and automating the delivery of financial services. The diverse digital innovation brought by fintech has impacted banking, insurance, mutual fund companies, and other sectors of the financial industry. Fintech also encompasses a new wave of companies, changing the way people pay, send money, lend, borrow, and invest. What are the key driving forces for the growth in fintech? Let's explore further. What are the key driving forces for the growth in fintech? Several factors are driving the growth of fintech, which include technical development, market demand and expectations, cost-saving requirements, change in consumer behavior, change in ecosystems, and regulations. The fintech industry is evolving. Fintech activities can take various forms and may be performed in different sectors of the financial industry. Therefore, it is important to develop categorizations and frameworks to analyze the fintech industry. The Fintech Tree is proposed by researchers from Bank for International Settlements in year 2020. The Fintech Tree distinguishes three categories: fintech activities, enabling technologies, and policy enablers. Fintech activities refer to technologically enabled provision of financial services. Fintech activities encompass the different sectors of the financial industry. There are 5 main types of fintech activities: deposit and lending, capital raising, asset management, payments, clearing, settlement, insurance, and crypto assets. Different financial service providers or companies may use a mix of technologies to support their services. Enabling technologies are those that make innovation possible in the provision of financial services, and as such, form the backbone of fintech activities. The enabling technologies of fintech could be broadly categorized into application programming interfaces, cloud computing, biometrics, distributed ledger technology, artificial intelligence, and machine learning. Policy enablers refer to public policy measures and initiatives that support the development of fintech activities and the use of enabling technologies. Policy enablers are critical to the stability of the fintech industry. The policy enablers include digital ID system, open banking, data protection, innovation facilitators, as well as cybersecurity. In addition to the Fintech Tree that we have just learned, I would like to share with you another useful categorization of fintech activities introduced by the Basel Committee on Banking Supervision in year 2018. Let's learn about it. The fintech sector can be categorized into two broad sectors: product sector and market support service. The three product sectors relate directly to core banking services. The market support services relate to innovations and new technologies that are not specific to the financial sector, but play a significant role in fintech developments. Finally, we have come to the end of this video. I hope this video is beneficial for learners. If you like this video, Please click like, share, or subscribe. Thank you. See you and goodbye.